So without further ado, at 9:31, if I can say hello to Rob and hand you over with a virtual round of applause. Rob is going to give you a demonstration and talk you through the changes to the banking industry and all the rest of it. And as I say, if you have any questions as we go along, please feel free to ask. But with a warm round of applause, it's Rob.
Thank you very much. Thank you. So I'll just swap over to present. So I'll just be a second whilst I just do that. And so you should, in one moment, be able to see my screen. So off we go.
I've got that, Rob, and that's all I can see. So
that's great. Wonderful. So thank you, everyone. Good morning. Thanks for joining today, just to find out a little bit more around how debt lending has changed and how those changes have really opened up opportunities for accountancy firms to further assist your clients, but whilst also increasing advisory work. So my name is Rob Hoyle. I work for Capitalise, and my role is looking after all of the new business that comes through Capitalise. So what I'd like to do today is just take you through a quick overview of the service, and then also just a brief demonstration of the Capitalise platform. And if you do have any questions, just enter them into the chat box as we go along, and Simon will help by reading those out for you. So just a quick overview of Capitalise. We were founded in London 2016. We've secured over £250 million worth of funding for UK SMEs. And we've got around about 40 employees, but that's rising very, very quickly. We raised £3.5 million in February 2019 during our Series A, and we've just gone through another round of funding. So we've actually just increased that quite significantly. So very well funded and in a great position within there. We've also 1,600 accounting practices as partners. So as you can see, it's been quite an incredible journey so far. So the traditional bank manager's gone. There's been 15,000 branches that have closed in the last 15 years, and that unfortunately leaves just 7,000 high street branches currently. That's therefore meant that 55,000 branch and relationship managers have just completely left banking. And what this loss of branches and the loss of bank managers means is that it is going to continue. The rise of challenger banks such as Monzo, Starling, they're absolutely eating into the high street banks customer base, and you're only going to see more. So to compete with this, NatWest have actually created their own digital bank, which is called Bo. HSBC are currently testing their own, which is called Kinetic. And what both companies are really trying to do is directly compete with this online presence. So unfortunately, what that means is that when your clients are looking for funding, there's a real high chance that the banking relationship that they've had for decades has just completely vanished. It's been replaced by probably a call center and a long drawn out process to try and apply for funding. So prior to the banking crisis in 2007, 50% of US capital was actually tied up in the main banks, whereas here in the UK, 85 to 90% of that capital was held by our four big banks. So what that meant is that it took us a long time to come out of that crisis. And concurrently, in 2008, the FCA lowered the barrier for entry into banking. So that allowed many more lenders into the market. And with the big four banks struggling to regain the footing and pulling back on the SME funding, along with the relaxation of entry requirements, this created an absolute explosion in options for lending. And you'll see that just on the graphic within here. This graphic actually only shows us a selection of 360 lenders that are available to businesses in the UK. And a question to yourself as I ask this is how many lenders from this graphic have you actually heard of before? Is it 50%? Is it 20%? Or is it even less? Now, more options should be fantastic news for businesses, because all of these different lenders and all of these new lenders, and each of them carving out a particular niche in the market, whether that's asset finance, invoice, property, working capital finance. But businesses still cite access to finance as one of their biggest challenges. And the reason that they cite this is to do with the loss of the traditional bank manager. The lenders moving online, moving into call centres, and certainly the threshold for relationship banking becoming increasingly out of reach for most SMEs. So when they need funding, they actually do not know where to turn. And then this lending decision becomes even more difficult when you consider it's an application for each lender and the effort that that's going to take and the time that that's going to take. Business owners' behaviour works against them. So the BDRC are a research consultancy, and they recently interviewed over 75,000 businesses across the UK to produce what they call is their SME Business Finance Monitor. So the findings show that whilst 80% of businesses are profitable, 78% of businesses also generally hold less than £10,000 cash in account, and 62% of them don't produce regular management accounts. So it shows that whilst the business is successful, they're also quite precarious position without the working capital, financial insights to see when problems might occur. And they also don't have the information to make decisions on opportunities that can push the business forward. And then if you then add to this the compounding effect that a third of payments from customers are late, this can have serious impacts on your clients. Now these findings were created pre-COVID, so you can imagine that the figures have changed dramatically, and that third of payments and 40 billion in cash that locked up in disputes, I can imagine, has grown significantly. The cash on account probably reduced even further. So what we find then as a result of the impacts that this has is that when businesses find that they need cash due to an opportunity, or simply that they haven't been paid by one of their customers, they find it really difficult to know what the best point of action to take is. So you'll see on the right hand side of here that what we find is that around 7 days before needing finance, businesses spend about an hour researching finance, which is typically searching Google, and then they just apply to one lender, which is traditionally the bank. And what we find then is that the bank sometimes will bring in a very slow no, and that can be the biggest problem in the speed of response from the bank to get to that point, especially when we consider that it's just 7 days before needing the funding that the client will generally start to look for that. What has happened there, whether the client has chosen Google, whether they've chosen the bank to go to first, is the client's actually chosen a provider first, which is the wrong way to look at lending. So what we believe is that the provider should be the very last step in looking for funding. And what we do here at Capitalise is we reverse that. So we look for the purpose first. So that's why does the client need the funding? We then look at the product second. So what's the most appropriate solution for the funding? And then we look at the provider last. So the purpose first, the product second, and then the provider last. So from the last 3 slides, you can see that businesses have a difficult time accessing funding. Number 1, bank managers are gone. Number 2, the lending choice is overwhelming. And number 3, business owners' choices go against them. And we feel that capital needs to be reframed because it can be a force for good if it's used properly. What it does is it enables businesses to grow, it creates jobs, and ultimately that feeds our economy. And time pressures, complicated processes, difficult choices generally mean that businesses often associate capital with debt, which is in a loss of control and disappointment. And once, when the bank manager would be able to help navigate these tricky waters, now they're actually finding that they're alone in finding their way. And with the change in direction for accountancy firms over the last 10 years towards advisory, there's a very much a new opportunity to help your clients to access funding. So I'd like you to think about what you currently suggest for a client when they ask about funding. Do you say that they should speak to the bank? Do you refer them to a local broker, or try and help them yourself through your own contacts? Well, we know that the banks aren't there to go to. Even the physical branches don't usually have a business lending expert available for all SMEs due to this threshold. Brokers, well, they generally will have a small network of lenders, and they may only use just a couple of those. And your client's generally not going to get the best option for themselves. It's going to be the best option for the broker. And then one of the things that we find regularly is that within an accounting firm, there is a network of contacts. However, what we find is that not only is that becoming more and more difficult to maintain as people move around within the industry or leave banking completely, it's also very time consuming. And what we also find, it's very difficult to charge for as well. So both of those things don't come together very easily when you can't charge for it and it's time consuming. So there's a little bit of background around how banking's changed and some of the reasons why clients are finding it difficult to access funding or know where the most appropriate solution for lending is. So why Capitalise? So as we've discussed, the clients don't have that personal bank manager. They're swamped with options for lending and they can make late and poor decisions, whilst your role in accountancy is becoming more and more advisory as the technology comes along to assist. And at Capitalise, what we do is we connect accountants to the financial products, the innovative workflows and the market insights that they need to build long, strong relationships with their clients. So we've chosen 106 different lenders to be part of our lending panel, and you'll see some of those on the right. So these range right through from NatWest, Barclays and Lloyds, so the tier 1 banks, through to institutional lenders such as Hitachi, Close Brothers, Bibby Financial, through to fintech lenders such as Funding Circle, iWalker or Esme, to just give you some examples. And we've secured over £250 million in funding so far, just 4 years into that journey.
So just on that, Rob, whilst I've got you, because one of the questions was, what's the difference between Capitalise and iWalker? So is iWalker a funding provider that you use? Is that the correct language for me to use?
Yeah, exactly that. So iWalker are a lender and one of the partners that we have on our lending panel. So iWalker are a lender in their own right. We have then the relationships with the other 105 different lenders. So the important part with what we're doing is being able to give many more access points to funding. So there's certainly a partner, and we do work alongside them. iWalker have certain restraints on the amount of lending and the timescales that they'll lend for as well. So sometimes that means that for some of our customers that they'll look to be lending over a longer period of time, or they'll want a larger amount to come into the business. So we certainly work alongside iWalker, but give a lot more opportunity for lending elsewhere.
Brilliant, thank you. I hope that answers your question, VJ. If there's any other questions around that, then please feel free to ask. That's it for the moment, Rob. Cheers, thank you.
Perfect. So really what we're aiming to try and do is maintain and strengthen those 106 different lending relationships that we've got, whilst also providing an online platform that your accountancy firm can use, which then means that you can access the relationships that we've built to easily compare, select, apply, and then access that business finance. So your accountancy firm, in essence, really gains a team of industry experts and then the connections to access the correct funding for your clients with just one relationship with Capitalise. So I'm just going to explain this slide a little bit further. Within the middle of here, what we have, so we have the lenders on the right-hand side, which I've discussed, and that we maintain and strengthen those relationships. In the middle, we also have individual teams within Capitalise. The two key ones there are the partnership managers and the funding specialists. The partnership managers would be the day-to-day contact point for an accountancy firm. They've all come from relationship backgrounds within lending, so within the banks or within lenders. So their role is to really help you as a firm to build out a funding service to your clients, to help with education alongside our education team, but be that day-to-day contact to help you with individual clients, talking about funding, marketing this to your clients, and really building up that understanding and expert knowledge around funding so that you can offer this as a service. The funding specialists are all from a lending decision-making background. So they've come from the lenders or underwriting teams. And their role really is that when a client has a requirement for lending, what they will do is they will take ownership. One person in that team will take ownership of that particular search. And then from that point then, what we will then do is they'll look after that. They'll make sure that they help you with getting the documents together. They'll make sure that they're continually assessing that the lenders that are being applied to, and they'll also help you package that up. And then finally, they do a review, which is called Capitalise review, where we go through all of the documentation and make sure that it's absolutely perfect. And at that point, then they'll then submit that to multiple lenders, and then they'll then discuss and negotiate with the lenders on yours and the client's behalf. So certainly there is a definite people and service element to what we do, and certainly that separates us from really anywhere else in terms of having a fantastic piece of software to facilitate this, but the people that can then help you with all of your requirements for your clients.
So just before you carry on then, Rob, just so I've got clarity around that, so that the client talks to us as the accountant, and they say, okay, I've got a problem, I need 20 grand or whatever it is by the end of the month, or more likely, help, I've run out of cash, how much do I need? But anyway, we kind of establish a requirement with the customer. And then we go to Capitalise, and we would have a client manager, and then that client manager is part of the funding team, or we have a separate relationship with the funding team. How does that bit work again?
So the funding team is the internal team within your offices. So so that'd be a team of 2 or 5 people that would sit within the accountancy firm.
Right. Okay. Sorry, I've got you. Right.
So they're part of that funding team. The partnership manager is the account manager for each individual accountancy firm.
Got you.
And they would then have that relationship on a day-to-day basis. The very first step actually is going through and entering into the software platform some details about the client. Okay. And I'll show you through the platform afterwards, which will give a bit more understanding of how that works. And once those details have gone in, you'll start to get some information from that without involving any people. And at that point, when you want to talk to the partnership manager, they'll get involved. And then at the point when you want to go, the client wants to proceed, then the funding specialists get involved.
Got you, right. So you have, every firm has a partnership manager within Capitalise, who's their first port of call, for want of a better phrase. Okay. And then within the firm, your suggestion is that you have some people, a team, or one person that's specifically trained in how it works. And then they work together with the client manager of the customer in order to make sure that relationship and environment works as effectively as it can between the client and Capitalise.
Exactly that. That's exactly perfect. Right. We start off with a small team of people that would be then educated around funding, and then we grow that team out over the next 6, 12, 18 months if needed. But certainly.
Okay. So when you say a small team, Rob, how small is a small team? 5, 10?
2 people or 5 people.
2 to 5. Right.
Yep.
Excellent, brilliant. Thank you.
Okay. So one of the key things that we know about funding and with clients is that actually clients and businesses as your clients are 4 times more likely to be accepted for funding if they work through an accountant who's using Capitalise end to end through that process. So rather than just unsecured working capital funding, Capitalise can actually help facilitate across a large range of debt lending products. So these include trade finance, which is used to fill the gap in trading, particularly used in import and export and the time scales between that. We do merchant cash advance. So this is lending which is secured on a debit or credit card terminal, and then a percentage of the take-ins then go through the till pay of the loan. So this is really useful for businesses with seasonality, as if they've got a slow month, they'll also have a low payment. Then when they have busy months, they then have a higher payment against that. So it's much easier to understand the cash flow that goes through there. Working capital finance is also something that we do a lot of. So this is just a typical loan and the most common lending product and one that everyone is used to and typically understands. Also invoice finance, really key at the moment because this is fundraising through the ledger book. So that helps with any overdue invoices and meaning that that's smoothed out. We can also assist with property finance, so that's bridging, buy-to-let, commercial premises, and we've also got lots of alternative lenders in this type of lending, so we do a lot within this space, and we work very, very deeply with the client and the accountancy firm in that area. And then finally, out of the six that they work alongside is asset finance. And so this is really the widest ranging lending product. This can range from office refurbs or laptops to the office equipment, maybe plant machinery worth millions. So quite wide ranging within there. So, you know, we ask, you know, from accountancy firms, if the clients are needing help, and certainly at the moment clients definitely are needing help, and throughout the next 6 to 12 months we forecast that will only increase. Should you as a firm really be stopping at the referral to a broker or a bank, or not being able to get involved even further? So partnering with Capitalise gives you a minimum share of 25% of the commission that we receive. However, I feel it just goes just a lot further than that. So what it does is it allows you to be even closer to your clients, because if you remember, clients are 4 times more likely to be accepted for funding working with their accountant. And this is because you can help them get their accounts in order, you can build projections, forecasts, and put that management information together, which can improve the success of application, but whilst also, and importantly, adding more chargeable revenue to your firm. So we do have an award-winning platform, and what I'll do is just briefly run through that for you.
So just as you go over to that platform, Rob, just on that 25% of the 1,600 partners that you've already got, do you find that they charge extra for the application process, for the funding process? So I don't know how big a 25% of a figure. I'm not sure of what that figure is, or so is it? I don't know. Let's ask the question. Typically, say for example, somebody borrows £100,000 as a straightforward bank loan. There's a commission on that, is there? And they receive 25% of that commission?
Yeah, so to make it really easy to understand, our average amount that we pay across all of our firms, and across the lending that they have, which is obviously multiple products, it averages around about £900. It is a little bit higher than that at the moment, but around about £900 on a commission that's paid back to the accountancy firm. Now, that can go into tens of thousands depending on what we actually pay out, or it can be, as you know, it can be just a couple of £100 dependent on the firm. Some firms are very heavy on working capital and small amounts, so they get an average which is lower. Other firms do lots of large assets or commercial premises with us, so the amount that they would receive back would be higher, but as an average, if you work on about £900.
So that's £900 per introduction to Capitalise, and I know that's not the language that you like to use because it's a partnership, but if there's a referral to Capitalise that's successful, the average payout to the accountant is £900. Is that
around about that? Yes.
Okay.
Yes.
And then in addition to that, they should be charging for the cash flow forecasts and the preparation of any documents that's needed in order to make that application successful. Have I got that right?
Absolutely. So that there's always going to be some additional work around helping the client, whether that's in time, whether that's in preparation of documents that support the application, and then so there's additional fees that are there. Now, one of the questions that I get very, very regularly is, okay, well, what do we do with that commission? I'm either not comfortable with commissions, we haven't taken commissions before, we do it infrequently. So the suggestion that we always have, and the one that works very, very well across our firms, is that you take that commission that we pay to the firm, whether that's £200, whether that's £4,000, and use that against the work that has been done. So almost use that as a payment on account against the client, so that the client gets the work that is then completed by the accountancy firm without any charge, and that the commission then pays for that. So the client then gets the additional work, they're happy with that, they also get the successfully completed lending, and the accountancy firm gets an increase in revenue from the chargeable services, and hopefully in that instance then everyone's happy with that.
Brilliant, excellent, thank you very much.
Good. So So what I'll do is, this is the Capitalise platform, so everyone gets access to this, and as I mentioned, it's either 2 or 5 users, really dependent on the firm, and usually dependent on the size of the firm as well, whether that's 2 or 5 users. So typically our multi-offices will be 5 users, or if you've got a very large office, you'll go to the 5 users. Most of our firms start with 2 users within here. They get access to the platform. So what we can do within here is, I'm just going to actually go and not explain the screen too much. I'm going to go straight to do a search, because this will start to explain how the platform works better. But just whilst I'm here, just wanted to point out, yes, we have 106 different lenders on there, and in a typical year, we have those 6 different products that I discussed, and where we can support and facilitate lending for your clients in lots of different ways. We also help with the coronavirus business interruption loan scheme, or CBILS as it's known. So you can actually go through and get government-backed loans, and we'll support that all the way through for the clients as well. So we'll help to create that on behalf of your clients. So there's normal lending, and then there's also the government-backed lending that we can do. So I'm just going to go through to the funding area within here. What we can see within the funding area is this, just over on here, we're going to do a funding search. This hopefully will then start to give you an understanding of where some of the software starts to narrow down, and give you the knowledge of which lenders are most likely to be able to support the client, but without any human interaction at this point. So if I just go through and continue with the search, we're going to ask, the software is asking some questions. We're just going to fill in some information, which will then start to drill down on the lenders that are most likely to be able to support the client. So we'll go through and we'll choose that the company is a limited company. Let's say that they are looking for 200,000. And then we can choose what the funds are going to be used for. Let's say it's equipment or asset finance. So what we can see here at the top, we've now got 77 successful matches. And what we're intended to try and do is reduce those. If you think of them being almost filtering, and as we answer the questions, that gets narrower towards the bottom, with the output being the lenders that we've got. So we'll watch those as I go through, just start to reduce. So how long does the client need the finance for? Let's say 3 years. Let's say their business is distribution. Now what I can then do is, if I spell it correctly, so distribution, I can then go and search company's house for that company. So let's just pick one. Let's go for Distribution Specialists Limited. Now this is going to import the company information and also import the director's information, which is useful for then having that information towards the application. But also what it does is it then also will give a credit rating. Now it doesn't, this is a soft touch credit scoring. It doesn't leave any footprint whatsoever on the client. So there's nothing adverse that's going to happen from this. So we can see actually that this client that I picked here has a good credit standing, which is fantastic, because that actually means that we're going to be able to keep the widest selection of our lenders in. I'm just going to quickly put a telephone number. We then have the ability for each firm to decide who is going to be contacted by ourselves and the lenders. We generally say me and my client. It makes it more efficient. It means that we can potentially go through this quicker, the process quicker. We can help you more. You're not having to be the conduit for every single question and answer. And typically that is the best solution for everyone in getting this through as quickly as possible and as effectively as possible. However, we do recognise that sometimes firms do want to charge for this, and as a result want to be seen to be doing as much as possible for the client. So we do have firms that say just me as well. For the purposes of this, I'm just going to carry on with me and my client. It's not going to make any difference to the matches within there. So let's put my client's Peter, let's say it's Pete at distribution.com. Say how long are they trading for? We will pick this up from Company's House. However, this is just to give an idea initially on the representation of which lenders. So let's say that they've been trading for 5 to 10 years. What's their revenue? So let's say that they're turning over 350,000. Again, it's just approximate, so you don't have to get the exact unless you've got that to hand. And then we've got some questions about the products. So you remember earlier I was mentioning about the different products that are suitable for clients. This relates then to that. So do they raise invoices for businesses? Obviously, this is relating to invoice financing. So let's say that they do. So I'm raising capital from their invoices. What type of businesses are the clients? Let's say they're SMEs. Do they have a credit and debit card terminal? Let's say that they don't use that. Is it for an asset? Yes, it was. And let's say that it is transportation. Do they receive purchase orders? No, they don't. And when does the client need the funding? So typically, as we mentioned, 7 days before needing funding, the clients would typically go onto Google or reach out to the bank. So we typically will find ASAP. Sometimes it is longer than that, especially with some of the commercial property. What guarantees are they prepared to offer? Most lenders are looking for a minimum of personal guarantees. Obviously, coronavirus and the government-backed schemes slightly differ from that, and you get the widest selection if you put both from there. But we can choose any of those. We can even go down to none. It won't give the client the widest selection of lenders. Are they homeowners? Yes, they are. And finally, can we share the details with lenders? So yes, they can. So I can carry on. I can continue to narrow down, but I'm not going to do that because it's similar type of questioning. And I think I'll probably be able to just show you the results straight away. So what we do here is we will then have a look at the information that we've got that we've just entered there, and this then gives an idea of the lenders that we're potentially going to suggest for the client, dependent on the information that we know about the client so far that we've put through. This isn't a definite list, but what this does is just give from the selections that we made earlier. So you can see on here that we have the different lenders in here. We also have the different products. You can see invoice financing, term loans. We then have the likelihood, so we can give that a score out of 4 for the likelihood. And these are all based on lending that we have successfully completed, lending that hasn't been successful, and also the knowledge that we have around the lenders to give the likelihood. We also, and that also impacts on the cost as well, so we can see that. And then we also have then the response time, and this is a response time from when we actually submit that through to the lenders. So you can see in here that we've got an instant offer as well. So for some of our lenders, so Optimum, iWalker, Barclays, we can get the 6 lenders in total. We can get instant offers directly through the platform. So it's an automated underwriting process for those. So at this point, we've just gone through. We've got all of the information about the lenders that we're going to be using, and we're in a place where we can have that conversation with the client and say these are the potential the lenders that you could apply for. Are you happy to proceed? Would you like to go any further? So what we then do is when the client is happy to proceed, we can have a conversation, as I mentioned before, with the partnership manager. So your account manager, your day-to-day contact, they can have discussions around initial discussions. But when the client is ready to proceed, this is the point where the funding specialist will help to come together. Now, Capitalise is an end-to-end platform. And what I mean by that is from this initial search all the way through to actually sending the application through to the lender, and the lender coming backwards and forwards to ask about this. It's all done through Capitalise, so end to end. So you can apply to multiple lenders. As you can see here, we've got 4 different lenders that we've chosen within here, and these have been selected from the previous questions. We can, in conjunction with the funding specialist, change those lenders out of the ones that were left to the 33, I think, that were left. We can change those around, and the funding specialist will give you that knowledge and that understanding of the right lenders as we start to get documents together. So really what we need to do is start to fill in some simple information, background and funding purpose, which was really just, as you can see in here, it's a short summary of the business background, history, purpose of the funding, so what they're needing the funding for and how they're going to use that, and then some details of any existing borrowing. We need to get together 6 months bank statements. If it's a seasonal business, then 12 months is much more useful for that because you can show the whole year. And and also the last set of annual accounts and two if you can send those in as well. And that'll start us off. We're then starting to work through on this. You can see some of the information like company details, directors information is already pulled through. You can connect your accounting solutions, so you can connect Sage, QuickBooks Xero. So loads of different ways that we can get information into the system, alongside also being able to invite the client individually. Now, I know that sometimes thinking about some of your clients, that probably doesn't sound like a great idea. This is definitely just to choose it on an individual basis with the client. And if you want the client to be involved to help provide the information, then they can get access to upload documents as well. Key thing with this is that we're applying to multiple lenders, but we're only uploading the documents once. So you get the documents together, we can then upload those and send those all off. Also, there's nothing to be fearful of in terms of, are you applying on to the lender at any point without the client saying yes, or without it being ready. We are the ones that send that right at the end after we've done the Capitalise review stage. So there's no worry about accidentally applying for lending on behalf of a client. So we help with the sort of timeline. You know, as you can see here, we've got the bank statements that are being asked for within there. We've got the profile. And then when we finally go through to the banks, you can see that we have the responses. You can see exactly where we're going in all those different stages as we progress through there. And they all sit within this funding area. You can see individually, these are all currently, these are the 3 different searches that I'm working on from a client, 3 individual clients at the moment. This is the one that we've just gone through, obviously incomplete because we haven't done anything for it yet. We've then gone through to this one here, which is in Capitalise review stage. What that means is that I can be confident that I've entered all of the information in conjunction with our funding specialist. So I've got all the detail here. I can see all the information around this particular client, and that we're actually ready to send the applications through. So you can see that these green circles now have completed around here, and then we've gone to Capitalise review. For our Walker, we're actually ready. We could send that application directly ourselves as well, if we wish to, or we can just do that with our funding specialists. Again, responses, because we've not sent that, there's no responses just there and ready. And when I then go through into the final one, which is, so after we've gone to Capitalise review, we've sent that across, you'll see that within the responses that they've all moved and progressed along. So, and where we have here, we've got Market Finance, you can see that they've made contact and prior to the review stage that they do. Investec have gone through to an underwriting, and then we've actually progressed through to underwritten offer with Bibby and Close Brothers, and they've actually had an offer accepted by the client for Close Brothers. So everything within here is completely contained end to end from the initial search all the way through. The client doesn't have any fees to pay to us at all, and that's whether the client is successful, whether they declined, or whether they decide to maybe go somewhere else, or just decide that they don't want the lending. There's no fees from the client to the client themselves. The only fees that they'll get are just through the typical fees that the lenders will charge for the lending itself. We have a full educational process. So what we intend to do is that we recognise that as you go through and become qualified accountants and do training in accountancy, that funding isn't necessarily going to be any part of that, and that actually most firms that we speak to have had some conversations around funding, but not a huge depth of conversation, just because it's not necessarily having the contacts to speak to. So what we try and do within every single firm is take you through an educational journey. Some of that is self-study. So you can see that we have these 2 different courses. They're all self-study elements that you can then do. It's about an hour and a half for the core, a little bit longer for the advisor level, which is more advanced. And it takes you through just an understanding of the lending market, and then the different products that we can provide. So it gives you that basis. We then take every firm through in person or online at the moment training as well, so that you get to then have that individual educational with our trainers and with your partnership manager. And we build up that knowledge over the space of the first year, really. So initially there's the courses that we do here, and then there's the webinars, and then there's ongoing with your partnership manager. And then at the point when you're ready to is then do a final advisor course as we go through there. So all the educational part to really understand and become the experts in funding is here, and ready for every firm to go and start on that journey. We also are able to recover debt on behalf of your clients. So let's use this as an example. If a client's got invoices or contracts that have been unpaid, so that maybe they've put a provision against it, anything up to 3 years of unpaid contracts, unpaid debt, we can help with that. We work alongside Escalate, who can do debt recovery and dispute resolution. And they will then be able to take that and hopefully be able to get that amount back for the client. So they do anything from £1,000 upwards. There's no financial risk. There's no charge whatsoever for the client unless there is a successfully recovered amount. And then at that point, then Escalate take 30% of the fee of the amount that's recovered. So your client gets 70% back. Especially useful if it's something that they've completely written off and decided that it's a bad debt and they're not going to get back. You actually get 3% of that as a firm for every time that you do that, and all you need to do is just put an inquiry through for that.
Just on that, Rob, because we've done something similar in the past, and if there's any legal costs or court costs, does the client pay them, or do you pay, or does the I'm sorry, I've forgotten the name now. Do the debt collectors pay them?
So it's all completely fully funded by Escalate. Escalate is Berman's solicitors in Manchester, so they look after that end to end. So they have full control of that. The client wouldn't pay any legal fees.
Okay, brilliant.
They collect that back from.
Right, so they pay absolutely nothing basically, unless money's recovered. So it's a no-brainer from the point of view of recovering money, because worst case scenario is you're going to get 70% back of something that you've basically written off. So
yeah, exactly that. And that's, and the worst case is that you don't get it back and you'd already written it off. So absolutely.
Yeah, so it's just a bit of time cost basically making the inquiry and setting it up. Okay, brilliant, excellent, thank you.
And the inquiry from the firm side, quite quick, because we then handle that. It's just an inquiry form and we go through, and then Berman's and Escalate will work alongside that.
Thank you.
And then just finally, one of the things that we were asked for regularly was be able to actually be a bit more proactive with looking for funding needs for a client, because it's great having a solution for funding when the client is there ready to looking for new finance or having the conversation. But what we were asked for is, okay, how can we actually speak to our clients and be able to tell them about funding requirements where they may not even know about that. So the final bit that I'm just going to show you through is Monitor. And what Monitor does is it allows you to add any of your clients onto the Capitalise platform. So whether we've funded them in the past or not, you can add your portfolio of clients into the platform. Once you've done that, if you then connect them to Xero, QuickBooks, Open Banking, what that'll then do is it'll start to pull through information from that client, and we can then start to then be able to understand the client and then give you proactive reasons to discuss funding with the clients. So what I'm going to do is just go straight to produce a report, and this is a simple report that you can produce for each of your clients that you've connected through Capitalise Monitor. So you'll see here we've got information about the business. We've also done a credit score. We use Credit Safe, and all of our subscribers also get credit reports that they can produce as well through the platform. So you can see that clients got excellent credit score. They've got an aggregate credit limit of 25,000 at the moment. But now this is where it starts to get interesting. What we can do based on the information that we know is start to give a funding benchmark. So that's just an estimate of the likelihood of the business being able to receive an offer of the amount that's here. So we can see, basing on what we know about the client, that the client's actually got a really strong profile. They're 8.2. So we're looking that we'll potentially be able to help them with just a simple funding opportunity of £90,000. We can move that around and we can edit the assumptions to try and work out the likelihood from there. Because we're connected to Zero, we can see the ledger balance for this Barclays account. We can also see the range of that. So at the moment, we're at £15,000. We can see that the client's been in their overdraft within the last 30 days. They've not been anything higher. And that's where they've been, so around about what, £6,000 into the overdraft. We can also see current facilities. So we can see that they've got MasterCard Funding Circle loan. We can see the amounts that are paid, and we can also see the credit card within their term renewal. Some of the detail that we have within here we'll be able to pull through. Some we'll just put some simple information to start that off, and we can see that ongoing. So things like the actual term loan amount and the balance, so the limit that they've got for the credit card would be something that you'd need to add in within there. Then we can start to see the balance sheet. So we've got the information within the balance sheet. We can drill down to that back into Monitor to have a look at that. And what all of this does, and this is the important part really, is once we start to get all this information together, we can start to see risks and opportunities for the client for funding. So risks can be a number of different things. For this example here, we've got a risk to the cash flow. So we can see that we've got a VAT liability that's coming up with £40,000. And we know that they've got cash of less than £15,000. So potentially there's a risk there that they're not going to have sufficient funds to settle that VAT liability. So what we suggest then is potentially there's a VAT loan to smooth that out. The client themselves is a great match for our lenders. We've got potentially three providers, and we can hopefully get that secured within around 14 hours. That's the average. And it'll be in the region of around about 7 to 12% APR for that VAT loan as a short-term loan. So that's as a risk. Opportunities would come from releasing cash from the debtor book via Invoice Finance. Again, we've got 6 providers. We can typically get that in around 4 hours for the client, and per invoice the cost will be about 2.5 to 3.5%. So it gives different reasons why they would be suggested. Again, refinancing a fixed asset that we've got within there, so different ways of doing that, and the lenders and the providers. So all this is around opportunities and risks, and it's client dependent, so it'll depend on each of the individual clients what will then show within here as opportunities and risks. And then finally down at the bottom, just a quick debtors risk. So it looks at the debtor list, sees the amount that's outstanding, shows how much percentage of revenue, and actually tells you the debtor days against that particular customer of your client. So it starts to give a bit of a risk and an understanding around there. So that's where Monitor helps, is that it starts to give proactive understanding around each of your clients. You can add as many clients to portfolio as you wish. There's no restrictions on that. The Learn is all around helping with understanding funding and becoming the experts. And then we also then have Recovery, which is about recovering bad debts, and our bread and butter funding. So that's a whistle-stop tour of Capitalise platform, why we exist, how we help accountancy firms, and I hope it's been useful for you.
Very much so. For me personally, Rob, it's been very insightful. So there's a couple of questions. Just Neil's raised a question. Does your database or your panel include social funders and investors?
No, it doesn't. So we don't have any social funders or investors within there. So
thank you. And then cost. So is it free to the accountant to use? And also the training. I noticed one of them said that the training was free. I think the basic one said it was free, but I didn't say where the next level was free. So is there any training costs?
So it's actually free because the access, the area, if in the platform we have if anybody gets access to the platform, it is free from within there. There is a monthly cost. So let me just say, there's something just in the way of there. So let's just go to the Capsules Plans, and I'll just give you a quick overview of how this works. So we work on a subscription, which is a monthly subscription with each of our firms. So there's different plans that we have within here. The most so we have starting with Pro, which is the 5 users, and that's £295 per month. It gives access to the platform for 5 people, gives then training for those 5 people and education for those 5 people, and also full access to the platform, the lenders, the partnership managers, and the funding specialists. So it's a complete service that we offer within Pro. That's £295 per month. As I said, typically that's if you've got multi offices, or if you have a large office, because some firms are very large, you know, have 50 to 100 people or even more in one office. So typically the Pro would be for there. Our most common partnership with firms is the partner level, and that is 2 users, what that then gives is the partnership manager, it gives the education, it gives the same platform, so recovery, it gives monitor, it gives the funding, and all of our lenders. So exactly the same, just a slightly different way of doing the training. You do that as a cohort with a couple of other firms, typically, and it's the 2 users as well. You still get the account management in terms of the partnership managers and the funding experts and everything else that we will give there. So they're very, very similar, partner and Pro. It's just whether the firm wants to roll this out a little bit wider and get more people involved is typically the way that they would choose between Pro and partner. Pro does get 30% commission, so a fixed 30%, and partner gets 25%, which is the amount that I mentioned earlier. So slightly lower with Pro. Now, and then Light, we actually don't have anybody that's ever chosen Light. And the reason for that is that Light's there very much for a very ad hoc basis. It's firms that are typically less than 200 clients, that they really want something that they can help with the clients occasionally and on an ad hoc basis. You don't go through the training. You don't have access to a partnership manager as well. So you access to the funding specialists and the platform, so you can go through there. The reason that we don't typically have that is that our partnership managers are so valuable through that educational journey and helping us support that. So really for people on this in this meeting, the partner and Pro are the most are the options there that will be there available. It's £150 a month for partner, and £295 for Pro. We only have a 6-month minimum commitment for every firm, so not a huge amount of tie-in. If everything goes wrong, we have very, very few firms that have ever left our subscriptions. And that's just because of the value that we put on top of this. As I mentioned before, the subscriptions are there as a way of us working alongside a firm and knowing that firm is going to commit to us. So the reason that we've set these at this amount is that we know that for partner, just 2 average transactions completed would completely pay for the annual subscription, being that £900 that I mentioned before was an average amount. So two of those, and an average means that you've got that. And actually around 15% of a typical accountancy firm is going to be looking at the client base is going to look for new funding within a year. And 50% of the clients will have some form of finance that could need refunding. So refinancing, so 2, we wouldn't be a success for either party within there. So we've set that very low intentionally to try and make sure that we work alongside firms that want to commit to working alongside us. And that is, again, as I said, £150 a month for partner, £295 for Pro. Now, we mentioned, sorry, Simon, did you have a question?
Yeah, no, just the question I was going to, basically from a summary point of view, because I came into this conversation expecting it to be basically a go compare or a moneysupermarket.com for commercial financing. That was mentally what I'd got. But in addition to that, even if a client is not looking for funding, the extra stuff, the monitor stuff, and the proactive advice in the, you could borrow this or you could do this, and if you can borrow it at 7% and then get a return on that at 15%, there's an element of proactivity to the platform that I hadn't realised that was there, as well as the reactivity in, I've got a VAT bill at the end of the month, I need to get paid. So that's one thing for me that I've taken out of it. The second thing is basically the difference between pro and partner. Pro's at 5 people, partner's at 2, and the training for pro is specific to your practice, whereas at partner, you are collaborating with other firms, and then you get into the confidentiality and all the other stuff and it not being specific to you. But basically, you're committing to 6 months worth of fees. And I mentally, I can justify on both of those levels and say, right, okay, so 6 months worth of fees, it's effectively a training product, a training program in order to educate my team on the different funding platforms that are out there, the different funding methods out there. And even if, and I know you said there's very few people that decide not to continue, even if I got to the end of the 6 months and decided not to continue, I would have still got value, even if I've not actually placed anybody any funding, if that makes any sense. So I'm almost trying to sell myself, Rob, at the moment.
Great summary, better than I could have done actually. So yeah, fantastic. Yeah.
Yeah, so that was my that was the thought process, and that was the things that was going through my head. So I'm just conscious we've got 3 minutes left. You've done training, you've done costs. I've done iWalker, I've done the time. So timescales was a question. You said that most people start looking 7 days before they've got the funding requirement, which surprised me somewhat, because I think it's like I need the money now type scenario. But do you have any stats within the platform that says on average the time to get the funding is X between applying and getting the money?
So within Monitor, that gives an estimate or an average amount of time that will take. So as I went through there, you can see the opportunities and the risks. You then saw against that there was different amounts.
Yeah, so where it said 14 hours, that was 14 hours from starting the process to the money basically being in the bank.
So once we then go through to actually sending that through to the lender with the starting point, that we can then do that. So certain things are very, very quick in terms of us doing that. Now, obviously, on the flip side of that, commercial mortgages will be, and lending for property takes a lot longer than 14 hours. So it will take. So it depends on the product really, but Monitor will start to give that understanding around that, and also partnership managers and experience as firms start to work alongside us. That also helps with understanding that as well.
Brilliant. Okay, so what I'll do is in the chat box I'll put your email address. So if anybody's interested in having more of a conversation about how it applies specifically to your practice, the email address is rob.hoyle at capitalise.com, and that's rob.hoyle at capitalise.com, and you'll gladly have a conversation with them, Rob, about how it works. There's also, if you tell them that you're coming through me, there's a bit of a discount for the first 6 months, I believe, Rob.
Yeah, absolutely. Yeah. So if you just let me know that you're coming through Simon, and we'll reduce the first 6 months by 50%.
Yeah, so that makes it, in my mind, makes it even better value. And what I did notice on the way through, there was an Amazon voucher as well. If anybody recommends another accountant, so definitely tell him, because we're spending a small fortune at the moment at Amazon, but I didn't realise that would be in the mix. So that's fantastic. I'll just check the questions. My last question, regulation-wise, Rob, do I need to register with the FSA? Do I need to tell my professional bodies? Do I need professional indemnity insurance to cover it off? Just reassure me around what I need to do or don't need to do with regards to regulation.
So we're regulated. So we are regulated with the FSA. And as far as from the firm, you're covered under your professional designated body status. So you don't need to let the ICAW, as an example, know that you're doing this. The key considerations is that the client knows that there is a commission, and they also know that the amount within there. So engagement letters are important within there, and we can help with those engagement letters as well. But you are covered so long as you have professional designated body status to have these conversations, and there's no concern within there.
Yeah, so for the majority of the firms then that are recommending customers to IFAs, we've already got the designated whatever it's called, DBB registration or whatever it is. So we'll be covered. We'll be covered anyway. Okay, brilliant. And we'll be notifying customers of the commission. So that's just a basic process that we should be doing as well. So that's covered that off. And then Jennifer's just sneaked in and asked, was that 50% off or 15% off, Rob? Yes, you did hear right, Jennifer. It's 50% off. So if you speak to Rob, or when you speak to Rob, if you tell him that you've been on this webinar or you've watched the video or the recording, if you tell Rob that you've come through me, little smiley face from Jennifer, then they'll knock 50% off for the first 6 months. So I think that's even better value, and to a degree, if you've got time, a no-brainer from regards to return on your investment. So I'm just conscious of the time. I'm 1 minute over, Rob. Is there anything else that you would like to share before we say thank you very much and goodbye?
No, for me, just thank you again to everyone for joining and let me talk to you about Capitalise. So I hope you have a great day.
Brilliant. Excellent. Thank you. Everybody saying thank you very much on the chat box. Thank you very much, Rob. And I will see you again soon. Thank you, Rob. Bye-bye. Bye-bye.